Listen up. Right now, while everyone is distracted and memes and online debates are happening, four massive events just dropped that could shape your finances, your investments, and the very future of our US economy. Bitcoin jumped back to 94,000. AI companies are in full blown arms race. Congress just passed a bill to release the Epstein files, and jobless claims are flashing a warning sign about the labor market. Most people won't understand the full story behind these headlines, but you will by the end of this episode. What's up, family? It's Coach Massey, and you're locked into the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, disciplined, and ready for opportunity, because that's what it's all about. Let's dive right in, starting with, of course, Bitcoin first. Today, Bitcoin bounced to 94,000, climbing off significant selling pressure. But the question on everyone's mind, is this a true bottom or just a dead cat bounce? But I know one thing, everyone is watching for certain things online. Fear and greed indexes sitting at 14, that's extreme fear. And historically, moments like this signal opportunity. We also look for bounce patterns. Bitcoin recovered 5K plus in a single day. Strong rebounds are great during periods of high fear, often preceded by extended uptrends. That's what we're hoping for. You have institutional activity, you got to look at the trading volumes and whale movements. If you don't know how to do it, watch this channel. Because when large players quietly accumulate during panic, it can signal readiness for a bigger move upward. And family, this is all market psychology at work. Bitcoin never sleeps, never shuts down, and can be proven resilient while centralized systems struggle, especially during a government shutdown. Next, let's talk about AI, because this week is a race for dominance, and it's heating up. And it's no longer just about flashy chatbots. Every major player is pushing the envelope. And what's happening now will define the next decade of tech, finance, and even culture. Are we in a bubble? Tech bubble? You see, Grok, well, Grok integrates real-time social media data into its engine. That means businesses can monitor trends, sentiment, and viral content instantly, giving them a predictive edge. Investors and market makers who understand this can spot opportunities before the broader market even reacts. ChatGPT, OpenAI continues to refine ChatGPT. It's crazy. You can see from finance to healthcare to marketing software and development, its ability to generate context-aware insights and automate complex workflows is making it a backbone tool for most companies seeking efficiency and competitive advantage. You also have Gemini by Google. Gemini fuses search and generative AI, and it's all on this single platform that combines information discovery, natural language understanding, and actionable predictions all in one engine. Companies that can harness this can optimize decisions in real time, giving them a strategic edge over competitors still relying on outdated methods. So what does this mean for investors, tech enthusiasts, and everyday people paying attention? Well, AI is no longer niche, right? This is not just a trend for early adopters or tech hobbyists. It is becoming a core driver of global wealth creation. The companies that dominate this space will define industries, disrupt traditional business models, and capture unprecedented market share, as you see with NVIDIA right now. Early positioning, whether through direct investment in AI companies or understanding how AI impacts the sectors, could translate into great returns in the long run. Think about it this way. In 1995, few people outside Silicon Valley realized how the internet would reshape the world. Those who did early, well, those investors, founders, and innovators, they built generational wealth. AI today is that next massive shift, and the signals are already flashing. You see, paying attention now is key. These are the companies, tools, and strategies that could define financial winners for years to come, generationally. You see, missing this wave can mean, well, being left behind for the next decade of innovation and influence that's unfolding. Next, let's cover big political news that has everyone talking. The U.S. House of Representatives just passed the bill to release the Epstein files by a staggering 427 to 1 vote. And now it heads to the Senate for a new vote. This is important because, political junkies alike and financial transparency is on the horizon. These files could reveal the names of powerful individuals from both sides, Democrat or Republican, Libertarian, and so on. This isn't gossip. This is a glimpse at the working networks and influence. We're trying to find accountability for these high-level people. And this could reshape politics. When these revelations come to light, they may shift public perception, alter political dynamics, and even policy decisions for years to come. And then you have systemic change that's possible. Beyond the scandal, this represents a push for oversight, greater transparency, and reforms in how powerful networks are monitored. You see, market implications are important, and that's why we're talking about this. We're talking about volatility in certain sectors, especially if industries or businesses are directly tied to the Epstein files. And here's the key takeaway. This is historic, and it matters regardless of which side of the aisle you sit on. Whether you're watching as a voter, an investor, or just someone who follows major political developments, the ripple effects could be significant, and I don't care what party you're from. I suggest you stay tuned. Once the Senate takes it up, the story could accelerate, and markets, politics, and public perception could all feel the impact in real time. Now, we don't like to admit it, but politics play a role in finance, especially when it comes to philosophical policies in the current time and in the future. Next up, let's talk about the U.S. Labor Department. They reported initial jobless claims at 232,000 for the week ending October 18th. Above expectations and definitely had an impact on today's stock market. So the labor market is showing cracks. It's very clear. Asset owners may feel insulated, but the truth is, wage earners, well, their paychecks and job security are under pressure. Historically, rising jobless claims often precede broader economic slowdowns or bear market conditions. This isn't just a number. It affects household budgets, discretionary spending, and consumer confidence. You got to understand, I told you yesterday, two economies in one America. So let's recap. The uncomfortable truth is this. The U.S. is operating two economies right now. Economy one, asset owners, probably like you and me, people who own real estate, stocks, Bitcoin, or businesses. These individuals see liquidity, rising asset values, and upside momentum. But economy two, everyone else, people who rely solely on wages, renters those who don't really have investment exposure, or households without inflation hedges. For the second group, life feels like a recession. Groceries are expensive, debt is growing, and savings are shrinking. Understanding this divide is critical for framing your financial decisions, framing your investments, and framing your risk management. So here's the big picture. Bitcoin shows resilience, but market psychology matters. Panic extremes often precede opportunity, but no guarantees. AI is the next frontier for global wealth and influence, and congressional action like the Epstein files release signals of transparency and accountability, and labor market cracks are showing, and that stimulus shows a K-shaped economy at work. This is a volatile moment in history. For those who understand cycles, data, and market behavior, there are opportunities. But family, I want to hear from you. Do you think Bitcoin has truly bottomed at 94,000 now? Was 89 the real bottom? Or is this a temporary bounce? And which AI company do you think will dominate the next decade and why? I like Grok, but we'll see. Comment below and let's get a real discussion going. And remember, this is not financial advice. Well, that's your daily huddle. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.